Hello and welcome to ZK Multi Capsule. Brent crude prices are largely listless today on Friday as crude oil hovers close to $64 a barrel, which happens to be its 2-week low. Having said so, now the commodity is headed for second consecutive weekly loss as fears of potential glut continues to weigh on the market. First of all, OPEC Plus output increased last month as the key members resumed halted production, while the non-OPEC producers have also ramped up the supply. Meanwhile, we have seen Saudi Arabia slashed its December crude prices for the Asian buyers. Gold prices are on track to tick lower for the week, headed for third consecutive weekly loss. With this, gold prices managed to nudge slightly higher by $10 on Friday morning and is trading very close to the key $4,000 an ounce mark. We have seen that the yellow metal is supported by softer US dollar, which has managed to slip slightly lower below the 100 mark, and the growing bets on another Federal Reserve rate cut even as the metal remained set for a weekly loss. Prolonged US government shutdown, which has now entered its second month, is leaving market with limited official guidance. Copper prices, the red metal, is now set for a weekly loss on Friday as the market paired overextended gains over the past few weeks that was supported by supply worries. Investors searched for direction amid a dearth of fundamental changes and macroeconomic data. Copper prices are poised to end the week 1.5% lower, while today, that's on daily basis, we are seeing it edging very close to $10,700 a ton mark. Chinese exports unexpectedly shrank in October for the first time in 18 months amid continued pressure from high US trade tariffs and cooling overseas demand. Market direction could come from a slew of Chinese economic data which are poised to be released next week. US natural gas climbed about 3% to 8-month high on Thursday as near record flows to LNG export plants boosted the demand for the fuel. Malaysian palm oil is where you need to keep your eye on because it's fallen once again below the critical 4,120 Malaysian ringgit a ton on Friday, hitting its lowest in 4 months amid stronger ringgit and weakness in the rival oils on the Dalian and Chicago exchange. And Chicago soybeans is where you need to keep your eye on. It's firmed up a little on Friday, but the market was on track for its first weekly decline in 4 as lower than expected Chinese buying sapped the investor sentiment.